Snipers, you have to see what's happening in the Bitcoin price right now as it's Good Friday and extended weekend, but we're seeing on-chain analytics over the last 24 hours show almost $1 billion of Bitcoin leaving exchanges. This is huge to come into the weekend. While traditional markets are closed, Bitcoin has a lot in store for us. Smash the like button for the YouTube algorithm if you support this content. Let's dive straight into the news and then the charts. So $900 million of Bitcoin leaving exchanges. What a great way to come into the weekend. And notice this, we're seeing whales accumulate Bitcoin over the last few days. Again, these are entities with over 1,000 Bitcoin. Maybe it's because they know we have potentially bottomed out. Notice how in this chart, every time we've seen this RSI move away from the blue zone, which we've already moved away, we have bottomed out for Bitcoin. Here are the exact settings for this RSI if you want to pull it up. But I just want to start off with these fundamentals. Keep in mind that the S&P 500 did close bearish, right? The Euro to USD chart is giving us an early confirmation that the DXY may also want to see some abnormal strength over the next few weeks. These aren't the best puzzle pieces, but in the immediate short term, the weekend is the most manipulated. We could see an upside scenario on the table for Bitcoin. I don't think we'll see Bitcoin come down to 38,000 this weekend just because of the fact that the S&P 500 barely rescued itself. I'll talk about that in just a second so you have an idea of what we're looking at. Let's dive straight into the charts, snipers. Once again, all I'm asking for is smash the like button for the YouTube algorithm if you support these four-dimensional updates. So first and foremost, realize this. Bitcoin is trying to get back above its 100-day moving average. The last 2 days, our daily candle has tested this 100-day moving average. That's a very positive sign. But more importantly, I want you guys to also keep this in mind. The S&P 500 has a very bearish continuation candle that we're going to have to face on Monday as traditional markets open back up from their extended weekend. And it looks like we want to maybe see a little bit more downside here for the S&P 500. That doesn't mean we're not going to finalize this move with a higher low and continue further up. But of course, the S&P 500 is going to have an effect. We want this type of scenario to happen. We really don't want to see this happen, right? And so we're expecting a higher low to form, but we couldn't get a worse close for the S&P 500 coming into this weekend. Bitcoin being as resilient as it is because it is at this 600-day moving average, which you can even look at the 3-day chart. This would be, I believe, the 200-day moving average or the 200-period moving average on a 3-day chart. But the 600-day moving average, we did an analysis on this, and we know that the only time Bitcoin likes to get below this is during a capitulation. And unless we're expecting some crazy fundamentals to come on the table over the next few days and weeks, I don't believe we should expect a capitulation for Bitcoin at this point. But do not be surprised if we see Bitcoin flirt inside of this range below 42,000, above 38,000. And regardless of what the S&P 500 does, we could even come down for the S&P 500. It could even affect Bitcoin to see downside. But we have all of this room and volume down below, all the way up to 34,788, where we could even come down to this max support at 34,788 and still just form another higher low. And things could continue on their merrily way, right? That's something we've been monitoring. Any break above 42,000, now our main goal is to stay above the 20-week moving average, sitting just around 42,000. Because right now, our weekly candle is fully below the 20-week moving average. That's not a good thing. That's why we've taken long positions at 39,000 and 37,000 on spot. I've said this before. While Bitcoin is at its 600-day moving average, it's never a bad time to enter into spot positions, throw them on your ledger, throw them on your Trezor, and forget about it for 5 years, because these are very good places to dollar cost average into Bitcoin. But for leverage positions, I think we have to be cautious, because what if we do see some sort of extreme scenario where we see a wick down to liquidate those longs? We want to be a little bit more careful until we're above the 20-week moving average. But in terms of long-term positions, it's never been a bad idea at the 600-day moving average. So the range that we're playing in is clearly 42,000 and 38,000. Let's expect this range to be where Bitcoin stays through this 3-day extended weekend. And I will say this, the Ethereum to Bitcoin chart is one of the charts that are giving us hope that we are still in a reversal because it's still bullish. We know that the DXY is something on a lot of people's radar because people are expecting a lower high to form. But from our video yesterday, we put out the bold statement, and I always like to put out bold statements. We're often right with these bold statements based on our 4-dimensional revolving parts, something that only our channel on YouTube covers. The Euro to USD is telling us that the DXY actually wants to break above the 2020 highs. That obviously wouldn't be a good thing for Bitcoin in the short term, but in the long term, it's never been a issue. The DXY, even going up over the long term, Bitcoin will continue to outperform. But I am expecting abnormal strength for the DXY soon. And so I would say this, at the end of the day, we just have to realize that right now, there are some macroeconomic events affecting the S&P 500 with inflation, interest rates, and that is also slowing Bitcoin down. But Bitcoin is far more resilient right now than other assets. And we've seen that clearly through January, February, and March for our monthly candle. And I'm expecting the same in April. And with that being said, it looks like during this weekend, we'll have a fun time with the whales because we're seeing bullish puzzle pieces, but that doesn't take us out of the gutter. The S&P 500 closed quite weak, and it looks like a bearish continuation, so we could expect Monday and Tuesday to potentially not be the best day for Bitcoin. But what if we get to 42,000, traditional markets open, and we just see another drop back below 40,000? That's kind of what I'm talking about when I say we're expecting sideways price action over the next few days. And with that, thank you all for tuning into the Snipers channel today. I think that was all I wanted to cover. And I appreciate each and every one of you tuned into our channel. Happy Friday, happy extended weekend to all of you. I'm expecting a lot of altcoins to move with Bitcoin moving to the side. Remember, anytime Bitcoin moves to the side, it's the time to start trading altcoins. And so we'll continue to look out for long positions on different altcoins as we could expect volatility there. And I think that we'll see a lot of opportunity with altcoins because the Ethereum to Bitcoin chart is a leading indicator for altcoins and it's showing strength. So we could also assume altcoins outside of Ethereum will also show some strength soon. So with that, I think that's all I wanted to cover today. What's truly on my radar at this point right now is monitoring this Euro to USD chart. We want to invalidate this bearish puzzle piece because that would be something that could give us a little bit more confidence in the immediate short term. And then the last thing I want to end with is the gold to Bitcoin chart, which has been very correlated to Bitcoin dominance. Once again, no other channel on YouTube is going to show you this. It's a 4-dimensional revolving part that we monitor above all of its daily moving averages, which means that we need to expect Bitcoin dominance to come up here very soon above all of its daily moving averages. And we've seen this happen before when market overall dumps. But we could also see abnormal strength with Bitcoin against altcoins for this to happen. And so let's wait and see what happens to this Bitcoin dominance chart. I think that that's going to be a tall telling sign of what to expect. But I would say this for Bitcoin to wrap up. We are in the range with a resistance of 42,000, a support of 38,000, but we're still fully below the 20-week moving average. It means in the macro, there's a bearish bias. We want to get above 42,000 to get back above that 20-week moving average to flip into a bullish bias, but also realize that we are sitting at this historically major support level, the 600-day moving average. We talked about this in our video yesterday, where in the past, Bitcoin, when there's nothing abnormal going on, it's always been a floor for Bitcoin to bounce. You know, at times, even over 40% just bouncing from the 600-day moving average. And the only time we've seen us really get below the 600-day moving average is during capitulation events. Well, specifically in March of 2020, we saw the BitMEX mass liquidations, and then the second time we got below that 600-day moving average was in late 2018 when we saw the miners capitulation. And so this is really where the 600-day moving average is, and we've always stayed above it, and it's always been a very strong level. So we're currently there right now, and I think that that's why we're seeing whales increase their holdings right now. I think even if they're expecting a little bit more tension in the macroeconomic environment, even if we see some sort of short-term capitulation, we'll most likely recover from that quite quickly. The point is that we've reached a floor, and it's a floor that has held very true and strong in the past. And maybe that's why we're starting to also see some of these indicators flash, like this stochastic RSI I showed you guys, leaving that blue zone against the S&P 500. Every time that's happened, it's been during a bottom, and we've immediately seen upside from there. And so let's see what happens. I'd love to hear your thoughts in the comments below. And I think that wraps up our Friday update. Smash the like button for the YouTube algorithm if you got this far. And I'll see you snipers next time. Snipers out.